Alrighty, Humphrey, I've been watching you for way too long. How you been?
I've been really well. Thank you for having me.
Thanks for coming out. San Francisco, right?
Yep, from SF.
Okay, there we go.
Lived there my whole life, but I did go to school down here. I went to LMU for 2 years.
Oh, no way.
And then, so whenever I'm back down here, I really enjoy Santa Monica, West Side. I like all that stuff.
Okay.
Yeah.
So, I mean, I obviously have been watching your stuff forever, but could you tell people what your vibe is, what kind of content you make, and kind of your background?
Yeah, I would say I'm a personal finance YouTuber now. I would more identify with YouTuber, but I make investing content, personal finance content for beginners, I would say. And I like to explain hard things easy. So if you have a complex topic, I like to break it down for you and make it easy for anyone to understand.
There we go.
Yeah.
Cool. Did you go to school for finance or economics or anything like that?
Yeah. So I did study economics and finance at school in college. And then I was a financial advisor for a year and a half outside once I graduated. But then I went into tech right after that.
Okay.
So I have a bit of a finance background. I have the licenses that have since expired because, you have to keep up with them every 5
2
years.
years? Oh, 5. Okay.
I think they lapse after 5 years.
Okay.
But if you don't work for a firm for 2 years, I think they go inactive or something like that.
Okay.
Yeah.
I quit before I even took my 7.
Okay.
I did do finance, but
well, I mean,
yeah.
hey, you probably know a little bit about it.
Was that test a pain in the ass? The 7 or the 63?
It's funny, yeah. I mean, the firm I worked for basically paid you to study for like 4 or 5 months, so that you passed it, and a lot rode on the fact that you would pass it because they wanted you to become producers of, wealth management. So they wanted you to get clients and service them. So if you didn't pass, it was almost like you wasted their time and you wasted your own time.
Okay, yeah.
Luckily, I passed the 7 barely. I think I passed on the number. So you needed like a 72% to pass. I got a 72%.
Oh, okay.
Which is crazy. But then the 66 was interesting. The Series 66, I passed like 95%.
Okay.
And I think you only needed like 80% or something. It was crazy. I was like, I don't know why I did so much better on the other one, but
okay, there we go. So you got the background. So what is the state of TikTok guru finance? Like what are you witnessing recently with like scammers and all that? I think you probably have some good input there.
I think it was worse back in 2020, 2021.
COVID times.
Yeah, because I feel like over time the market kind of susses out if you're a scammer or not. And so right now I feel like if you see some financial advice on TikTok, it's generally good, generally. I mean, you always want to see what their motive is. Like if they're trying to sell you something, if they're trying to sell you index life insurance, that's a weird one I see online all the time.
Life insurance now, yeah, it's weird.
Yeah, and or if they have like some sort of course they're promoting that's like an options trading course, it's usually a little sketchier. But if they're just trying to provide good information, like I'm trying to think of somebody that does like Your Rich BFF.
Yeah,
she's been on TikTok for a long time, and she just likes to provide good financial information that's actionable for people. I like that. I think it's good. Yeah.
Yeah. There's a lot of what's up with the life insurance thing? Like, can you explain that to people, like why it's weird and a scam and all that? Because I have people that ask me like, should I get into life insurance? And they're like in their 20s, and I'm like,
yeah. So I'll just do it basically because I know mostly the basics. But there's whole life insurance and there's term life insurance. These are the most two popular types of insurances. Term is pretty standard. You pay a set amount, like a premium, a monthly fee, and it's very low premium. It's usually like less than $100 per month, probably like $50-$60 for someone of your age. And it'll last for like, let's say 30 years, and you'll get a certain benefit from that. So like you might pay over 30 years, you might pay $12,000 for that total benefit, but the benefit might be $1 million if you pass away.
Okay.
Which is good. That's like good risk to return.
Normal.
Hopefully you don't die, all that good stuff. Then there's whole life insurance. Very different. They sell it almost as like an investment.
Okay, yeah, I've heard that.
The premiums are like
the
premiums are like $300 to $500 a month.
Okay.
But what's really interesting, what they don't tell you, is that the insurance person that sells you the whole life insurance, part of that premium is going towards their payment. It's upfront.
Oh, okay.
And then the rest gets invested, and that is supposed to be making you money that's going to fund your own death benefit.
Okay.
But theoretically, it could go on forever. And so, like, that's why people like to sell it, is because there's no term on it. Like, it could last your whole life.
Okay.
That's why it's called whole life.
Okay.
But if you look into the terms of most whole life agreements, it's usually beneficial for the insurance salesman in the first 10 years. It's all up front.
Okay.
And then later on, as you pay your premiums, your death benefit payout gets higher and higher. And then the way that they do that is they invest a portion of it. And then they can kind of like obfuscate all the details with like the investing portion. And
Okay.
theoretically, if you do the numbers, it's just better to just invest in like a Roth IRA and then just like fund your own death benefit.
Okay.
Like it's not even worth.
So the fees just destroy you.
The fees destroy you, yeah. And if you look at who's getting paid, the insurance guy is getting paid.
Okay.
And that's why I think so much of it is on TikTok, or that's why your friend reaches out to you on Facebook from middle school.
Yeah.
Like, they're going to get paid on it. So
I've had people that have reached out to me. I'm like, I don't think, and it's always people that like are just getting into investing.
Oh, yeah.
And I'm like, I don't think this is it. So then I've done some research too, and it's like, you just get destroyed, right?
And I think they don't understand it. The people that are trying to sell it to you don't understand it because they're being taught some sort of system by, like, let's say, one of these life insurance companies. And the life insurance companies are trying to tell them how to sell it, and then they go and sell it to their friends, and they don't really get it. They don't understand it either. So it's kind of like trying to have an argument with a wall because they don't really get. They can't figure it out. Yeah.
Okay.
Yeah. So
TikTokified.
I tell people to try to stay away from whole life at minimum.
Okay.
I'm sure there's going to be some people in the comments that are whole life insurance salesmen and be like,
they're coming.
You're freaking wrong. But term life is generally better just financially.
Okay. Yeah. So what I've seen that you give obviously very sound advice that's steady. Sure. What is in your opinion, the best way to become a millionaire for the average person watching?
Most guaranteed way to become a millionaire is just Roth IRA, index funds, and contribute regularly over time.
Okay.
That's like the easiest way.
Mm-hmm.
Most people don't know what a Roth IRA is. Most people won't stay consistent with investing, and most people will probably get too emotional with investing that they're going to sell everything when stuff goes down, let's say 5-10%. When really all the gains are towards the end of your investing cycle because of compound interest. Mm-hmm. And also all the gains are by holding. You don't really, like if you sell emotionally, you actually lose out on some of the best days in the market. And the best days in the market are what makes up a lot of your return.
It's only like a few days that are crucial, right?
That's right. Yeah. It's it's something, the stats crazy.
I've seen the numbers where it's like, if you just missed out on like 15 days over the last like 20 years, like you'll lose.
Your portfolio would be flat or something like that. Yeah. I don't know what the exact number is. We can probably look up the stat after this podcast, but it's like, if you missed the best 10 days in the market in the last 10 years, you would have missed out on like all the returns, basically. Yeah.
So people ask you probably like, should I buy right now? Should I sell right now?
Yeah, common question.
Yeah.
Yeah. I mean, I just had a friend, she texted me this morning because today the tariffs went into effect, the 25% tariffs on Canada and Mexico, to give you guys an idea of what day it is.
Yeah.
And she was like, oh, the S&P 500 dipped. Is it a good time to buy? But she's 24. And it's like, by the time she's going to be 54, the S&P 500 is definitely not going to be at 5,000, 6,000. It's probably going to be 10,000, 12,000, a lot higher. And so in my mind, it's like if you buy now for 30 years from now, it's going to be higher in 30 years. So if you're young and you're trying to invest for retirement, it's always a good time to buy. When is it a bad time to buy? Maybe if you're like 3 years out from retirement and you're like, oh, I need this cash, or you're 5 years out and you're not too sure, like if the market's going to be flat for the next 5 years, or you're going to lose money, then I would be a little more hesitant. But like someone like you, 25 years old, making a good income, just sock away some money for retirement. It's good.
Yeah.
Yeah.
Do you buy individual stocks at all?
I do.
Okay.
I do.
What percentage, I'd say, like roughly?
So when I first started making videos, it was all index funds.
Okay.
Since I've been more involved into the financial world in the last like 5-6 years, making content every day, I've started to buy more individual stocks.
Okay.
It's not something I would recommend to everybody, but I would say right now my portfolio is 50-50. So 50% index funds and 50% individual stocks. And mostly because I only own 6 stocks, but a lot of them have ballooned in the last 5 years.
Are you tech heavy?
Yeah, like Nvidia, for example, ballooned in the last 5 years, so it makes up more of my portfolio.
Like Apple's, Microsoft.
Apple's another one. Meta is another one that I bought at like 100.
Yeah, I've been pumping Meta.
650, 700 now. And then one I acquired last year at like $15 was Robinhood, and it's at 50 now.
Oh, wow.
And I went heavy into Robinhood because I just believed in the tech and the fact that the founder was like continuing to innovate and also just like creating a bunch of products that other brokerages were not innovating on. Like Fidelity and Schwab haven't like changed their platforms in years. So.
Yeah, I worked at Schwab, and I'm just like shaking them sometimes. I'm like, you guys got to catch up.
Yeah, how was it working there? How long did you work there for? And
about a year. I was there for a year. I quit right before I took my 7. I was doing their financial advising, like track or whatever.
Yeah.
And it's very old clientele for sure, but they were good. It was a good job. Like people ask me like, oh yeah, like, do you regret it? Are you, whatever. Obviously I don't regret it now, but
Yeah.
I, at the time was like, holy shit, I should not be quitting my job to do TikTok and all that.
Well, so this was when you were about to start TikTok, or you started the TikToks when you were working at Schwab? Is that true?
Like I graduated from school, moved to Dallas to work at their new, like the headquarters. I'm doing my training and like I'm doing like Roth conversions, like just like very basic phone stuff at the time.
Yeah.
So I have old people yelling at me. They're like 90 years old and they're like, well, I can't reset my password, that kind of stuff. And yeah, their tech is way behind. I was investing at Robinhood at the time when I worked at Schwab.
Yeah, exactly.
But I didn't love the customer service kind of vibe at Robinhood at the time. I'm thinking
I remember this is probably like early 2020.
Yeah, it was right when the whole, the big scandal came out too with the whole...
And I'm sure your audience probably knows this, but I don't really remember this. Can you tell me when was the first time that you decided to like film a car video with someone outside, like in public?
It was 2 weeks after moving to Dallas. I lived in Tucson, Arizona, so I'd never seen Ferraris before or anything like that. So I was like, oh my gosh, there's Ferraris and Lamborghinis. Like, what do they do? How do I become a millionaire? So that's kind of how it all started, was like right when I started. And then I had to report my income to Schwab, and then it started like becoming disbalanced, and they were like, what's going on here? They were cool though. They were cool about it.
Yeah, that's good.
Yeah. So.
And what do you think about James Dumoulin? You know who that is?
No.
The School of Hard Knocks guy?
Oh.
Because he's essentially what you are, but he just maybe asks more business-related questions.
Yeah, he's a little bit more like intense with it, but it's funny because he films at Highland Park Village in Dallas, Texas. Yeah. And I, in my first month, started only filming there, and then they tried to arrest me because somebody complained.
Oh, wow.
And even though I was giving them good, like, basically like, hey, Highland Park Village is a place where rich people are. And then I got banned for 5 years. I'm still banned currently. And it's funny because he's over there filming. So I will say, though, I didn't invent the concept of asking what they do for a living. It's been around forever.
Yeah.
So good for him, Yeah. I'm glad that he's doing his own thing.
It's slightly different, but
although I will say, I'm like, the fact that he's filming where I'm banned currently, I'm like, Highland Park Village, that's a little crazy, but flattery, it's flattery.
Yeah, it's good.
Yeah, so I'm curious too, like, do you invest in crypto at all?
I do.
Okay.
I do. I have a small percentage of our portfolio is in crypto.
Okay.
Probably, I would say right now it's probably like 5%.
Okay.
So of that 50-50 I told you earlier, that's mostly just the equity portfolio, but like out of everything, 5% crypto.
Do you invest in shit coins or anything like that?
I do.
Okay,
I do. Unfortunately, I do.
Okay,
Yeah.
I'm kind of shocked by that actually. But
so I don't really view. Okay, so I have a crypto holding. Most of it's Bitcoin.
Okay.
That's like the safe, and then I have a very small percentage of the 5% that I just talked about, where I just kind of have fun.
Okay.
So I don't even treat it as investing. I just kind of treat it as like a side, whatever, like fund.
Okay.
That I would just call gambling.
Okay, yeah.
So
do you do options?
Don't do it at home. No, I don't touch options anymore.
True gambling. I guess both are kind of
gambling. So options, I did dabble in options in 2019 and 2020, and at some point I was up a lot.
Okay,
I was up like 50 grand. And then I did like 15 to 20 more options trade over the past like 2 or 3 years. And then if Robinhood now has like your lifetime P&L on options. And now I'm down like 5 grand.
Okay.
So I was up 50, down 5, and I just realized it's not even worth the hassle and the headache and the time.
It really is just gambling, unless you're selling like covered calls or like very like.
I would say covered calls a little bit more safe and more reliable, but if you're just like buying like options that expire at the end of the week, calls, it's not fun.
Because people are like, oh, I know, like through the charts and whatnot. Do you believe in technical analysis? Are you a technical analysis guy or?
I'm more of a fundamental investor. Okay. However, I have friends that are technical analysis analysts, and I believe in both. Yeah, sure. Okay. But I think that's more for short-term moves.
I think to me it's a little astrology leaning.
A little more astrology leaning,
I think the astrology of financial guys. Yeah. But that's my opinion.
Yeah, that's fair.
I know people that make a lot of money doing it.
Yeah.
And they're like, this is this chart and this chart, and I'm like, okay, yeah.
Because really, a chart is just reflecting what supply and demand looks like and what sentiment looks like of human psychology. So if people can start to read it, then I could see how they could be successful with it. I just never have been able to.
Okay.
I've always been just kind of like, let me find a good company, let me invest in it because I think the market thinks it's undervalued, and then just hopefully let that thesis play out. And then, in a year, 2 years, 5 years, 10 years, hopefully it plays out and the best company will rise to the top.
Okay.
It's more like the Warren Buffett method, I would say.
Gotcha.
Yeah.
Do you have any, I know it's, crystal ball talk, but do you think we're headed for a recession in the next couple of years?
No.
Okay, good.
I don't have a crystal ball. Obviously I could be wrong.
Yeah.
You can clip that and be like, oh,
Yeah,
he's freaking
like-
wrong on a recession day. But
Yeah.
but I do think the market is frothy.
Mm-hmm.
So valuations are very high right now. If you look at the price to earnings ratio of the S&P 500, I think it's at 24 or 25, and typically it trades at 15 to 20. So
Okay.
it tells me it's like 25 to 30% overvalued right now, and people are happy to pay that right now because of everything that's going on in the economy. But usually when you see, like the S&P 500 last year, I think it was up 30%. The previous year was up 25%, and you don't really see those stretches too often in history.
Yeah.
The usual average return is 8 to 10% per year. So the fact that like you got 2 abnormal years and maybe we're also heading for a third abnormal year, a little weird to me. I would assume something's going to correct at some point. Yeah.
Yeah. Okay.
But I don't know about full blown recession. I don't know.
Yeah, I guess no one really does know.
No one really does know. Yeah.
I do the same strategy as you for the most part. I'm just tossing money in the S&P,
Yeah.
VOO, like just basically the low expense fees. And
Yeah. And I think in 20, 25 years, 30 years, you're going to look at your account and be like, holy crap.
yeah.
That's a lot. Yeah.
Do you ever get worried though that like, like Japan, like a Japan situation could happen where the market just goes down and doesn't recover for like 30 years? Do you think that ever is something that could happen to America?
I think you would see the indicators way ahead before that time would. I mean, you're not gonna. It's not gonna hit you like you're not getting blindsided by it.
Okay.
Like you'll see it coming.
Yeah.
Like the economic indicators will point to like deflation or GDP negative growth for like a few quarters in a row, and then maybe you'll be able to be like, okay, this is maybe a bad situation. Maybe I'll move my money elsewhere.
Okay.
But the U.S. so far has still been growing really steadily.
Never
Yeah.
goes down.
I think it's mostly
long-term.
driven by a lot of the private sector, and the private sector doesn't really, like the government has a lot of power over the private sector, or at least like show power. Like they like to like pretend that they have a lot of action, but really I think private sector drives a lot of the economy in the U.S. And
Okay.
as long as they keep continuing to build and get stronger and get more customers and all that good stuff, it should be fine.
There we go.
Yep.
So obviously I do a lot of car stuff.
Yeah. Tell me.
Obviously, supercars recently, only for the first time ever, have been sometimes an investment for the
Okay,
most part.
yeah.
But typically, do you drive a nice car? What is your opinion on like the average person buying like a supercar?
Yeah. I drive a Mercedes GLE coupe.
Okay.
And it's paid off. And when I bought it, it was 4 years used.
Okay.
So it was a lease turn back.
Cool.
I got it for like $55K, and I paid cash for it. I financed it for the first like 6 months, and then I realized, why am I paying a financing fee? I'll just pay for it in cash because I had the cash.
Yeah.
I haven't had a car payment in like 6 years. That was like 6 years ago. And I've been just driving the same car. I do like luxury. I like something that's comfortable and easy to ride. I don't love supercars.
Okay,
Only
yeah.
because they're uncomfortable. I don't think I could daily drive it. I think the flashiness is cool for like 2 days,
Mm-hmm.
and then you're going to get really tired of it. That's my personal opinion. I'm not a huge car person.
Okay. Yeah.
That's mainly why. I could see the appeal. Like when I was younger, when I was like 12, I wanted a Porsche, like a
Okay,
Porsche
yeah.
911. I mean, I still think they're beautiful,
Yeah.
but
They're great. They're great.
these
yeah.
days I just prefer like a nice, luxurious, comfy ride. My opinion on people buying supercars, I think if they can afford it, then great. But a lot of people can't afford them, right? So
Yeah.
it's like,
They're
Yeah.
car poor or house poor. Or what
yeah,
is it?
like theoretically, there's this 35% rule of car buying, which says that the purchase price of the car should be no more than 35% of your gross income.
Okay.
So we
It's a
can do
golden rule,
so
kinda.
yeah, so we can do the math on like, let's do the math on what's a supercar and how much does it cost. Like,
Okay. So let's say Lamborghini Huracan.
Yeah,
Kind
how
of the
much is that?
Toyota of supercars out here for LA people.
Sure.
240,000, right, Eric? Yeah. 208. Let's go 280.
Let's say round even number.
Okay, 300.
Okay, so we'll say 300,000 for a supercar, and then if we use the 35% car rule of buying,
Yeah.
your gross income should be 857K per year.
Okay. Wow.
Yeah, so you should be making close to $1 million to even think about buying that car.
Okay.
But I bet you a lot of people aren't,
Yeah. No.
right? Yeah,
People are
exactly.
probably making 300K a year or less that buy them.
Yeah, and I would also say 857K for a Lambo Huracan is still, I don't think you're making enough.
Okay.
I would want to be able to afford the Lambo Huracan 2 or 3 times over before buying it, right? Mm-hmm. Yeah, so
Yeah.
that's interesting.
I don't finance. I mean, I'll start off financing a car maybe at the very beginning, but just for the credit.
Yeah.
And then the dealerships. I remember the last time I bought my Audi, they go, it was kind of funny, honestly. The salesperson's like, I'm looking at the numbers, and this is during
Yeah.
the peak of inflation. My interest rate, because I was on a new business, was on my new business, which, my new LLC, I didn't have any credit history, was like 9% was my APR. Jeez. And I'm like looking at them and I'm like, okay, obviously in my head, I'm like, I'm going to be just immediately paying this thing off. And they're like, trust me, I know you're not going to like this rate, but hold on to it for a year or two. And I'm doing the math and I'm like, over the course of a 7-year or whatever it was, I'm going to be paying like $150,000 or something like that. And they're just trying to tell me don't pay it off. And then like 4 months later, I was like,
I think they get paid when you finance through their bank.
Yeah,
I'm pretty sure they do. So like as long as you finance for a few months, they'll get paid and then you can just pay it off.
Okay.
If you'd like. I mean, that way you don't screw the car, salesman over, but
Yeah.
I don't know. It'd be better if you held it for longer.
They don't love me. They don't love me, honestly, with getting cars. And they're probably not going to love me even more now because they looked at my previous history of my Porsche GT4 and they go, so we saw that you paid this off in 6 months, but we definitely don't recommend doing that. And I'm like, yeah, sure, I definitely won't.
I think if they love you, you're doing something wrong financially, probably.
Yeah.
So
somebody has to lose on it.
Yeah. So I think you got to be at a place where like they like you enough to sell you cars, but they don't love you. Because if they love you, that means you're just being a dope. Like, you're just literally paying money.
Do you have like a golden rule with used vehicles? Like what should the average person watching buy a car at, maybe like year-wise on depreciation? Or
year 3 or 4 is really great. That's when most of the depreciation has been chipped away.
Okay.
On any depreciation curve, it's usually like 40% of the car has depreciated by year 4. Okay. And that's when you can still get a really nice car for a reasonable price, and it's still new-ish, right? It doesn't have that many miles on it. So you get like the same benefits of driving a really new car for like half the price or 40% off, which is incredible, right? Like, I think too many people just pay the premium on a new car, and sometimes it is worth it to buy a new car, for certain reasons. But really no good financial reasons. Yeah.
The only way I can think of is, so a lot of people in LA, it's a big problem actually, is with supercars like Lamborghini Huracan, they'll put in a chip that essentially makes it to where you can drive around with your miles, tricking the computer.
Oh, interesting.
So you'll get, and a lot of people do it. It's actually a bigger problem than people know.
Sounds illegal.
It's super illegal. Super illegal. And so you'll have a Lamborghini Huracan that has really 30,000 miles on it, but it'll say 2,000 miles on it. And they've gotten so good at it where you can trick the system completely. Even if you bring it in, sometimes they're so good that they just rewrite the code.
I didn't know
so you have to be careful at who you're buying it from. Like if you're buying it from some like Miami Bitcoin boy that is very techie, you have to maybe be worried that they're going to be tricking. And that in that instance, if you're buying something that's so expensive where the miles really do matter, that's really, in some ways, one of the only ways that it makes sense, unless you're buying from someone reliable like a dealership.
Yeah, like if you go certified pre-owned with a dealership, it's probably fine, right?
But even then, it can be scary, honestly, because even the dealerships don't know sometimes. So it's like a weird new problem.
I didn't know about that problem. You should make a video about that.
Yeah, you should.
That'd be interesting.
It's kind of like, it's a new age like scam.
Yeah, that's a new age scam. Well, I mean,
Eric's nodding his head back.
I think rolling back the odometer has always been a scam back in the day.
It's
but
just
now it's digital, so it's like you can't freaking tell.
Yeah.
And it's like, okay, it's interesting. I'll watch out in case I ever want to buy one.
Yeah, if you're ever buying a Lamborghini,
I'm not buying one, so it's okay.
Yeah. I'd say it's funny because I was like completely like you in the front of like buying a supercar. Like even though I've liked cars forever, like I was like, oh, okay, I should just get something that's reliable and whatnot. But for my brand, having a supercar probably makes me more money in the long term because it builds up my brand. But for the average person watching, I agree. Unless you're a big car guy, and that's where you find joy, basically,
Yeah, I would say for your brand, if you have a supercar, you can show up to all the supercar meetups.
Yeah.
You could join all the networking groups. You can go to the track days, and you can get more content out of it. So
yeah.
For you, I guess it's a full write-off, probably.
It is a full write-off. Yeah, because my CPA was telling me, she's like, now, normally, I cannot justify, and she's a very conservative CPA. She's like, I can't justify writing off this entire car. But for you, you're in a rare position where you could tell the IRS that, and they would get it. And I'm like, okay.
Because your whole brand is built off of cars, and what do you do for a living?
But other people try. They try, she says, to be like, hey, I need a Bugatti.
I can't do that.
Yeah,
for example, I can't do that. Yeah.
So yeah, it's interesting. But I had a friend actually. He's a partner in a different venture. We do a car rally, and he bought a used Lamborghini Murcielago, or not Murcielago, it was a Gallardo. And at the time, they were selling for like $75,000. And he wasn't even a car guy at all for the most part. He was just kind of getting into it. And he bought the Lamborghini literally just to as a financial advisor just to meet people, join the Lamborghini club, and network. And he said that it's paid itself off like 10 times over.
Yeah.
So it just depends sometimes. Yeah.
Yeah, that's a good investment. I mean, people join country clubs all the time. People send their kids to private school all the time for networking reasons. And or you go to a nice, business school or a nice school. Yeah. Yeah. Some things are worth paying for sure.
Speaking of that, what's your opinion on college for the average person watching? Maybe in two fronts, private school or just general. Do you think it's worth it now as an investment for the average person?
Yeah, I think education is always worth it. Depends on how much you're paying for it, and depends on what your major is and if you're going to use it after college. Like if you don't really know what you're going to do and like you're going to go to a private school and your parents are going to help you pay for, $50,000 a year to do art or, do art history, for example, and you have no interest in working in art history after, like you're just kind of doing a major to do a major, I don't think it's worth it. But if you're going to school for like a very specialized thing, such as computer engineering, what else? Doctor, architect, something interesting like that, then it could still pay off for sure. I think these days though, because of how much you can make money online and how easy it is to learn stuff online, it's not as necessary as it used to be in the past. But, especially with non-traditional jobs these days. Yeah.
I don't use my job. Well, kind of. Yeah. It's kind of in the same. Finance is kind of. I'd say finance is interesting because it helps me make money. Just overall, it's one of those like rare ones where you don't need to be employed to use what you've learned. But a lot of people go in undecided now. Yeah. And then they pay for it all themselves, and now they'll never ever their whole life make up the difference, especially in the opportunity cost of missing the income and also the compound interest they would have gained off of it. It's crazy, honestly. Yeah, but it's so just dependent, right? Like we just talked about the networking thing. It's like about who you know, and like if you go to a school and maybe you're friends with someone who's very powerful, like their parents are very powerful, that could really pay off for you down the line. You just never know. Yeah. And so it's really about each individual having to make that decision for themselves. It's like, is college worth it for me? Yeah. And for a lot of people, it still is worth it for them. Like education is always, I think, is always a good thing to have. And I think even in a traditional job, if you're applying for it and you don't have a college degree versus someone that does, I think an employer would still want someone with a college degree. Yeah. We haven't changed that much. I talk to a lot. It's kind of like just a paper. Yeah. I guess on the surface, like no one uses what they learn in school unless you're very specialized for the most part. Daily, like I forget most of the stuff, but it's like I guess it shows that you can. It shows that you can show up. Yeah, you can show up to a class and actually take it and pass. Yeah, which is already showing you. It's a proxy for responsibility. Like, hey, you could at least like do this. But I talk to a lot of mix of people. Like I talk to some people in supercars that are like never go to school, and I talk to a lot of people that are like, yeah, go to school, and I guess it really just depends. It's just funny and kind of sad that you're having this huge decision at 18 cast upon somebody that doesn't know what they're doing. Like I had no clue what I was doing. So I'd say, even though I'm not a wise old man, if you are undecided and you're 18, just like chill for a couple of years and work and then like go to school at like 22. It's like weird thing that people are like, you have to go to school when you're like 18. And I think, all their high school friends go to school and they're like, oh, I don't want to be out of place. So there's a lot of societal pressure on going to college at the right time too. Yeah. Even I judged people in the time when I was 18, if they didn't go to school, I was like, what's wrong with them? Yeah. Which is crazy now because or like someone takes a gap year, like, why would you do that? Yeah. It's like a gap year. Are you stupid? Yeah. And like now I'm like, that's such a smart idea. If you don't know what you're doing. If you're like, I want to be a lawyer. It's like, okay, go ahead and do it. Yeah, exactly. Or my sister wants to be a doctor. So she was like, I'm just going to go to med school. Or like in a pre-med med school. I'm like, okay, that tracks. Yeah. I was like, do you really want to be a doctor? She's like, I don't know. I'm like, all right, well, like, okay. You're kind of on the track. So. Yeah, I was a pre-med student for 1 year. And then I luckily was like, I don't want to do this. And I got out and did business. But see, that's good that you went to school to learn that. Yeah, right? Yeah. I did. I just was like, I don't like chemistry, which is something that's important to know if you're going to be a doctor. Yeah, exactly. Yeah. What was it like for you starting, because I assume you do, your content full time, right? Yeah. What was that like switching over to doing that? Was that scary? How old were you? Give me the whole backstory. Yeah. So I was working at a tech company after the financial advisor job, probably till I was age 29. I'm 37 now. And looking good for 37. Thank you. Appreciate that. Asian genes. Yeah. 29, and I want to start a business by 30.
So I quit my job and I started a e-commerce business. I was selling posters.
Okay.
Posters, custom maps. So like you could design a map on like a Google Map type of software, and then it would come out really beautiful with different colors, and you can customize exactly where you wanted the map to be. So we could zoom in on just like your street and call it like Danielmac's home.
Okay.
And then you can customize it. It was decor. And they would be drop shipped from Dallas, Texas, actually.
Okay.
And so I actually met a printer in Dallas, Texas. After calling around in the San Francisco Bay Area, they brought our costs way lower.
Oh, cool.
And so I'd go to Dallas a lot to meet with them. But we did about, $870K in sales the first year.
Whoa.
Actually, first year was like $300K in sales because it was a half year.
Okay.
And then $870K the first full year. And then about $800K the third year.
How much of that was profit?
Only 10%, 20%. 20% max, because
I
had a business partner, so we had to split the profit. 2, our costs were way too high. I didn't really know how to manage the ad costs as well as the development costs for our website. So I think we were just like super inefficient. Okay. So we did okay, but that was my first foray into business, and I was living at home at the time, so I was working from home. This was pre-pandemic. I'm already kind of used to it, but I was always trying different stuff. I was like trying a little business here, trying a little business here. Like I tried to start a budgeting app. I tried to make another dropshipping website. I tried a whole bunch of different things. And then the one thing I always wanted to try was social media. And I was watching a lot of Graham Stephan in 2017, 2018. And I was like, I think I could do similar to what Graham does because I, was a financial advisor. So I made 3 YouTube videos. They went nowhere. Summer 2019. I think I got 10 views on each.
Okay.
And then
long form YouTube?
Long form. I always wanted to do long form YouTube.
Impossible at the start. Yeah.
Yeah, impossible.
How do you even
impossible.
Grow? Yeah.
Oh my God, it was hard. Like each video took me 20 hours, and then they would get 10 views. I was like, this is stupid.
Yeah.
And then I was watching a lot of TikTok in August 2019, randomly because someone at a bookstore was like, "Oh, did you have you downloaded TikTok yet?" I was like, "What the fuck is TikTok?"
Yeah, dancing app.
Yeah, and so I downloaded it, and I got addicted in like August. I was watching it every night before bed, just hilarious videos, even though everyone was young. And then that's when I kind of got the idea. I searched personal finance on TikTok at the time, and there was no video. There's one video from like one guy.
Yeah.
And I was like, there's no other videos here.
Was Armani Explains? Was he there doing that at
No,
the time?
he joined a little bit after pandemic, actually, I think.
Okay.
But it was a guy named Main Street Wolf.
Okay. Yes.
Shout out Colin. He's great.
I watched him too.
He had stock videos and then one personal finance video. When I searched the hashtag, I was like, okay, maybe I can make some videos here. So I think it was like around September, October, I decided I want to make a video every day on TikTok in 2019. And then at the end of the year, I started making a video a day in December. So I basically delayed my start until December 20th. But by the time January 10th rolled around, I had 100,000 followers.
Whoa, okay.
Yeah.
Just crazy back then to grow.
Oh, crazy. I made a very basic video, got 1,000 followers. These days, that video would get maybe 10 views. Or, it would get me 10 followers. Now, back then, it got me 1,000. It was so easy. And by the time pandemic started, I had 300,000 or something like that. And then I just kept going. And then that same year, November 2020, I decided I could probably do it full time because social media money was coming in to the point where I think I made $5K that month on social media.
On ad revenue through TikTok?
On TikTok brand partnerships, and then about $1,000 on YouTube ad revenue.
Oh, okay.
So I think the $1,000 on YouTube ad revenue was showing me the fact that if I doubled down on YouTube, this could eventually be a big income source. Mm-hmm. And I felt like, okay, I have enough brand revenue coming in that I could probably do this full time if I just doubled down on it. And at the time, I was still living at home, so it was very low risk for me. Mm-hmm. And I had saved a bunch of that money from the entrepreneurship stuff and also my previous job. And so I was like, okay, let me try this full time. And that's when I switched, November 2020. And then I went hard on YouTube. I started making 3 videos a week for 2 months. Okay. Not sustainable. And then I went down to 2, and then
that's crazy. On YouTube,
long
form.
Yeah, I think I have the stats somewhere. We did I think I posted 120 videos in 2021. Oh, wow. Long form.
Okay. That's crazy.
And then in 2022, 2023, and 2024, we dropped it down to 70, 50, 50. So we're about 1 a week right now. Okay. One, maybe some. I like to do 2 a week if I could, but 1 is pretty solid. I can always hit the 1. Okay. And I think the main through line there is consistency.
Yeah. Yeah. I got into TikTok at the same time as you, August.
Yeah, I remember.
August. But yeah, I remember at the time there were so many scam accounts Guru, just terrible advice. And I remember watching your stuff right off the rip, and then a couple other creators, and I was like, wow, I'm actually getting good advice on TikTok through finance. Like, it's,
Yeah,
and
good.
obviously you have to be careful, but you know, you can tell. Like, I could tell that you knew what you're talking about versus like
I
some
appreciate
random people
that.
that are like, "Hey, buy this one stock, and I promise it'll go up."
Yeah.
So that was interesting. But then YouTube is your bigger chunk of the pie, right?
These days, yeah, 90% of my revenue comes from YouTube
Okay.
or YouTube brand partnerships, and then some of my money still comes from like an Instagram Reel partnership.
Okay.
But not much money comes from TikTok at all.
Yeah. Do you ever
actually.
do like branded posts on TikTok?
Usually, it's only in conjunction with the Instagram. It's like, oh, do you want to cross post it to TikTok? We'll throw it in there. But most brands don't ask for TikTok only anymore.
Yeah.
Which is sad.
Yeah. Yeah.
But it used to be. Remember, I don't know if you remember 2021,
Yeah,
2022, but all the brands were like, we want to buy on TikTok.
Yeah,
And
now it's TikTok is that's why when it was getting banned, well, for the 40th time,
Yeah.
brands like it's like very, if you have a banger video, it can do well, but like you could have 50 million followers on TikTok and post a video and it gets like 20,000 views versus Instagram is a lot more consistent for me at least.
Same.
You have, you know, you're guaranteed to at least get some views. And I think it's because TikTok's algorithm is so good that it's so cutthroat that they don't care how many followers you have. If you have a bad video, they don't care. They're not showing it.
Yeah. I posted a brand deal for a brand, like 3 months ago, and on Instagram it got 100,000 views, and on TikTok it got 3,000. And they're just like, hey, they emailed me, and I'm like, I don't know what to tell you.
It's
Like,
sad. You're just like,
it's
"Oh,
just that's just the way it is. Like,
yeah. So they know that now, I think. So do you think TikTok will get banned?
I don't know. What do they have? Like 90 days until
Yeah,
the
I
next
think
review?
75. I think Trump made it 75 or something.
I feel like it won't.
Yeah,
It's
yeah.
just like just empty threats typically.
Yeah, Trump. Oh, I mean, if Trump doesn't do it, then he made the deal fail, and he's the
I
deal
know.
guy. So
Yeah.
it's kind of on his like. If he doesn't do it, he'll make it happen.
Well, today even Mexico paused the tariffs on Mexico today. I don't know if you just heard this was like an hour ago.
I saw the market go like bing.
Yeah, for like 30 days. But they're just postponing. It's like,
Yeah.
great. What's going to happen in 30 days? The same thing, you know? So I feel like that's just his negotiation tactic is let me scare the crap out of you and like really, you know, push you, and then I'll roll it back just a little
Yeah,
bit.
he did it with Colombia too. I think.
Yeah.
And then they were like, all right, fine.
Yeah.
Yeah. So the tariffs are. I mean, obviously you did econ. Like, what are your thoughts on tariffs?
Yeah, generally bad.
Yeah. I don't think anyone's like
it's a
they're-
trade war, so
Yeah.
yeah. I mean, goods in your country go up, prices of goods in their country go up, and also exports go down. Like let's say you put a 25% tariff on Canada, American suppliers are less likely to import from Canada. So, you know, if the Canadian economy is dependent on their exports, which a lot of their economy is, especially to the U.S., it's a net negative for them, and it would likely cause them to go into recession, but the U.S. not so much because the U.S. is not as heavily reliant on Canadian imports than they are reliant on Canadian exports, if that makes sense. Yeah.
Yeah, I think a lot of people are just political in general when it comes to the market. And I feel like, in general, I've looked at the graphs and like, regardless of whoever's in power,
Yep.
and I would get calls like this all the time. Whoever's in power, it doesn't really have a big impact on the S&P's performance.
Correct.
So I remember I would be at Schwab, and right before the election in 2020, people were calling in, sell everything,
Right.
do this, do that, and we'd be
Right.
like, we can't give you. At the time, I couldn't give financial advice, obviously, but I'd say like, generally though, if you look at the charts, there hasn't been any difference in performance, regardless of Democrats versus Republicans.
Yeah.
So people always get really weird about it. I don't know. Do you have any intel on that or thoughts?
Yeah, I think there's some statistic or study that shows that no matter who's in power, the S&P it's up. It's up, but
it goes up in general.
But it's not correlated with whoever's in power, either party.
People have very strong opinions.
But
on
people have opinions. They're like, oh,
Biden
Republican
would
president,
destroy it,
this
yeah.
is great, you know, or you know, so.
Yeah, it's very silly, honestly.
it's
People
pretty
get
silly.
very, I mean, obviously it's getting more political, but I just tell people that. I'm like, literally don't sell your portfolio.
Yeah.
It'll go up with Trump, probably. It'll go up
Yeah.
with Biden. It'll go up with Kamala. Like,
Exactly.
people are weird. Yeah. People are very
So-
crazy, honestly.
I'm with you there.
Yeah. So I'm buying. I'm
buy
still
and
buying.
hold. Buy and hold.
Yep. So what is the biggest financial mistake people can make that are young?
Okay, so number one, not having a Roth IRA.
Okay.
Number two, not having an emergency fund. I think 41% of people actually can't even cover a $1,000 emergency expense. So having an emergency fund sounds basic, but a lot of people don't have that. So I think that's another mistake. And then the third one is the wealth killer, buying a car that they can't afford.
Okay,
So which
yeah.
one would you like to dive deeper into any one of those?
I mean, I think the car one's interesting because I agree. I did a video too, and people got like, well, they got a little mad at me. But if you can't afford a supercar, Ferrari, don't buy one.
Right,
but
exactly.
Yeah, I'd love to hear more about just the basics of Roth for people that maybe aren't.
Yeah, so let's first talk about the Roth IRA. The Roth IRA is a individual retirement account that is very powerful. It has super great tax advantages. So you contribute to it with after-tax dollars, so money that you've already been taxed on. But as a result, when you contribute into it and you invest in it, all your earnings, all your profits are tax-free when you retire at the age of 59. At the age of 59 and a half, you can withdraw it, and it's all tax-free. So imagine you make $2 million in Apple stock over the next 40 years that you invest in it. When you're 59 and a half, you don't pay any tax. Versus in a normal taxable brokerage account, you might pay 30-40% in taxes on that, which is going to be very significant for you later on in life. Later on in life.
Yeah. I mean, because also you don't know what the taxes will be in 6 years too, right?
Right. It could be a lot higher. Exactly. Yeah. And it's so powerful that they limit you on how much you can contribute. It's only $7,000 a year max that you can contribute. And that'll go up slowly over time, but still, I think it's the number one thing that can really build your wealth is the Roth IRA.
Okay.
Number two, the emergency fund. Yeah, I think you got to have 3 to 6 months of emergency funds saved up. So whatever your monthly expenses are, multiply them by 3 to 6, and you should get that number. And you should just always have that money set aside, ready to be deployed for an emergency and never touch it. That's essentially what you want. And that will give you a lot of peace of mind, I think, and will also allow you to take more risks because you're not so worried about like, oh man, if I lose my job, I'm going to be screwed for like the next 3 months, right? At least you have some money to kind of have in your back pocket there.
Gotcha.
Yeah.
And then the supercar thing's kind of, that makes sense. You went over the amount that you think is a good number. So obviously you know about the FIRE method, like financial income.
Financial independence, retire early. Yeah, for sure.
Hypothetically, and I know there's some general rules that people use.
Yep.
If you're 30 years old, for example, or any number, how do you gauge whether you're able to retire? Is there like a number that you would pick?
So the Financial Independence Retire Early community, the FIRE community, likes to suggest 4%, the 4% rule. So whatever your nest egg is, divided by 4%, and that's how much you... Sorry, let me do this again.
Recut, yeah. What is the FIRE rule?
Yeah, the FIRE community likes to use the 4% rule, which means that whatever your nest egg is, you can live off of 4% of that every year in perpetuity until you, when you're retired.
So you don't even withdraw. You can just withdraw from it, and the compounding will keep up.
Yes, exactly.
Just have that number.
So the idea is like if you have $1 million, you can withdraw $40,000 from it every single year, 4%. But your investment gains will make up for that $40,000 that you withdraw, plus a little bit more, and then some. So the idea is that you never run out of money, and the prescribed time period is 30 years, but studies have shown that the 4% rule is ultra conservative, and most people die with money that they still have.
Okay.
So, I mean, in an ideal perfect retirement, you would run out of money the day you die.
Okay.
But the 4% rule is very conservative. You will probably end up with more money by the time you pass, and you can pass it on to your heirs and whatnot. And so some people like to suggest a higher withdrawal rate. You can go 4.7%. You can go 5%. I think Dave Ramsey even likes up to 8%.
Whoa, okay.
Don't quote me on that, but somewhere a little higher. But the idea is 4% is very conservative and should be fine for you.
Okay. Do you recommend credit cards for people? I know people like Dave Ramsey, no shade against him, say maybe don't have a credit card. What are your thoughts on credit cards?
I think if you're a disciplined spender of money, get a credit card. Get those cash back, get those rewards points. But if you know yourself and you're going to rack up a balance on there and you're going to overextend yourself, don't get a credit card. I have a friend of mine. I'm going to change her name. Let's call her Christina.
Okay.
I told her to open an Apple Card back in the day, and I feel so bad because she's been keeping about a $2,000 balance on it ever since.
Oh, gosh.
And I've offered to pay it off because I felt responsible for, her opening the card, but she even has self-admitted she's not the most disciplined spender or disciplined person that pays off her card. And so she likes to overextend herself by buying gifts for people and then puts it on her credit card. But I think if you know that you're the type that you can't handle that type of debt, don't do it at all because it's not worth it.
Yeah.
But there are some financially savvy people, such as probably yourself. Me, I pay my credit card off every couple days. I never owe the credit card companies any money. So when you never have to owe them any money because you're paying off your balance all the time, then you should be using a credit card because you're getting rewarded for that, anywhere from 2 to 4% on your spend, and that adds up over time, and it's definitely worth it. So I would say credit cards is a blanket statement. I'm okay with it if you're disciplined. That's it.
That makes sense. Yeah. I definitely credit card hack. I'm like, here's my dining card. But yeah, exactly. Paid off in full. Never run a balance.
Yeah, exactly.
And, well, except for a little bit. Yeah. So I got one more question.
Yes. Let's hit it.
Before we conclude here. Gen Z. Mm-hmm. Do you think that Gen Z will ever be able to afford a house? Like any average Gen Z person? Like, do you think the generation is screwed? Like, what do you think?
Well, I was talking to my dad about this because my dad's, I don't know if you guys know this, my dad's 93.
Oh, okay.
And so he bought his first house, for like $50,000 in like, the 80s or something. And I was asking him, so maybe the 70s, excuse me. Wow. I was asking him what wages were like back then. And he could almost afford a home off of, I want to say 2 years salary.
Wow.
two years worth of salary. So imagine you make $100K a year right now. That's like a home costing $200K, right? But these days you make $100K a year right now. If you're in LA, I mean, you probably have to save 15, 20 years before you're even able to buy it.
Let's just, $2 million.
Let's just not even call the down payment. Let's just say like buy the house in cash. It's like 15 years worth of your wages.
Yeah.
And I just think it's getting worse and worse and worse and worse. And so will Gen Z ever be able to afford a home? I think it's just going to get way tougher. There's way more people out there in the world now. Competition is fierce. You can make way more money, sure, but it's going to require a lot more money. Yeah. And even for my generation, the millennial generation, it's very hard to afford a home. I would say most of my friends who afford homes have some help from their parents, at least with the down payment or like a little bit of help here and there. Otherwise, they're buying 500K condos and like it's very small, right?
It's grim.
So it's grim out there.
Yeah, and I don't think unless legislation's enacted,
right?
And who are the people making that? The rich people that are old,
right?
I don't think it's gonna change, honestly. So,
and I would just say it depends on your city. There are some cities where it's way cheaper to rent than to buy. Like in San Francisco, for example, it's like twice as cheap to rent than to buy the same comparable home. So it's just better to rent there,
even with the your mortgage being paid off and like the value of the house. I think it's still
So there are some cities in which maybe that disparity gets worse and you'll just always rent. But I mean, the whole idea is like you have to pay money to live somewhere. So it's it does suck though. I mean, home ownership is a big cornerstone of the American dream, and like, owning property and becoming wealthy is, real estate does help with that. So
yeah, it's just funny. Yeah. Some like really old people are like, well, lazy generation. And I'm like,
yeah,
if you look at the inflation adjusted amounts, it's crazy.
Oh, it's crazy.
Yeah. Same with college too, but that's another topic. So
yeah.
Yeah. All right. Well, that's it. I don't want to hold you too long here. It's really easy to talk to you about finance. I could talk all day about it.
Yeah, for sure.
That's awesome. Thanks for coming on. Yeah.
Yeah. Thank you so much.